special guest today, Mr. Chris Davis from Wheelhouse Trading. Hello, Chris. How are you today?
I'm good, Corey. How you doing, man?
Real good, real good. I appreciate you getting up so early. I know it's early on your side of the world. We're on the East Coast, and you are Pacific time.
Yeah, well, I'm always up early, man. I sleep in two shifts. I go to bed at 2 a.m. in the morning, an hour after pre-market opens, and I sleep till 5 a.m. and I'm up before the market opens and pre-market, and then I wait for an
Awesome.
hour after the aftermarket opens, and I take a nap from 2 to 5. So I sleep in two shifts. That way, in the
Oh
evening,
man, that's crazy. That is commitment to the markets.
yeah, I'm like super dedicated. It's what I do full time. So I
How long
monitor.
how long you been doing that? I mean, that's like a lifestyle change. That's more than just watching charts, man.
Well, I've been trading since 2004, but I started doing the double shift thing more in the bear market because you have so many catalysts going on globally. You know what I mean? So I started
Right,
watching
right, right.
the Hong Kong market, the Canadian market, the Japanese market, the Australian, the European Open, and then into the U.S. pre-market, so I could get data that would affect the U.S. or New York Stock Exchange. So that's why I started doing that, and yeah, that's normally not what
Cool.
I would do in a bull cycle, but you got to be dedicated.
Right, right. That sounds, we talk a lot about psychology on this show, and one of the things that's hard is juggling so many bits of data. I'm sure you've refined the process over the years. In the beginning, I'm sure it was, all over the place, but what kind of tools have you used to kind of make that journey easier? That's a lot of data points.
Yeah, so I'm looking for leaders. I'm very technically driven, so I built an algorithm over the last few years and fine-tuned it over and over and over. I worked with this gentleman that created the codes for cancer detection devices to find anomalies, and some other people. And it has
Oh, like real data scientists. This is top-notch data science.
Yeah, and we actually have a business, and we hired like the head data scientist from Gartner on another business of ours. So yeah, we're doing that, and I've been trading, and I've even though I have about 200 different indicators in the background, all with custom settings and codings and things of that nature that I put in there. I've wound it down to three different systems. One is a core sync system. It's a probability system. So there's 12 different things that can happen, and if all
Chris,
12
but
go,
before we get into the specifics of the system, for people who don't know you or haven't followed you, I know you have a big YouTube following. Share with me a little bit about the philosophy behind Wheelhouse Trading.
well, the wheelhouse trading, essentially, I was retired. I was, sitting at a waterfront estate, and I was kind of bored. I was just reading a lot of books, playing pool, taking the girls out on the boat, barbecuing, like. And I finally just got bored, and I decided to do like a YouTube channel and work on this algorithm. And then I created a Discord and got students, and was teaching kind of advanced trading techniques. And that's kind of where that started. I've always been interested in markets, and went to school for economics and business finance as well,
Hmm.
a long time ago. So yeah, before that I was in real estate and financial lending. So I've just kind of always been into it, and now I'm just full time trading. I mean, that's just what I do.
Got it. And from what I gather, you're more on the algorithmic side. You're not doing a ton of discretionary stuff.
Yeah, well, by nature I am a pivot to pivot non-biased directional trader. So depending on the volatility in the market, depends on the time frame. So if it's just kind of climbing at 1-2% a day, nice and easy breezy, then you're going to be on the daily, something like that. But
Sure.
if it's choppy and getting all crazy, and you got to enter hedges, your short hedge off of a resistance, or your range bound, and you're playing the long off the support, and the hedging off you're doing that kind of thing, or it's a stock pickers market, or it's just super volatile and you have to lower the time frame, and you got to be down on the 5 minute, or I calibrate a lot. So depending on what is going on in the market and in the sector and across all 192 industry groups, with events and news breaking globally, I'm measuring and calibrating constantly for what system I'm using.
That's awesome. That is certainly, you mentioned earlier, advanced trading systems. That sounds very advanced. What would you say, your students, what does it take for somebody to come up to speed, time-wise, dedication-wise, to be proficient in your arena of systems?
Well, I had quite a few students and still people in the Discord that have learned, and we've given them like a beta to the algo. It doesn't have as much as I have. We're on like version 439 or something like that. But they have a really good version, but they can't see all the coding and settings. They can change the colors
Hmm.
and things like that. And a lot of these people, when they first showed up to me in the bear market, they were down 80 grand, 250 grand, stuff like that. And I helped them get those funds back, and now they're trading successfully. And I also taught them a lot, going all the way back from like Charles Dow and the Dow theory to, Elliott and
Sure, sure,
cycle theory, and understanding pivots and just looking at volume price analysis, how to do price action trading with volume, and then understand like where you're at in the cycle, what type of volatility you're dealing with, and why. But really, when we built the algo, we built it based off of not really like a retail trader, more of an institutional market making type.
right,
We have we understand like the campaigns that market makers will do to flush you out, bring it down to a psychological
sure,
fade, retest the liquidity zones, make sure there's still buyers in there. So when I do show you the algos, it'll show you, the discount zone, the equilibrium, the premium zone. Some of that's based off of physics and velocity and mass and stuff like that, but it is how it works. And it'll show you some of that different stuff. So
cool, awesome. Now, do you do any? We have a lot of people who come to us, particularly in the prop space. They've traded for a little bit, they're looking for something else, they're looking for that capital. Maybe they're not experts in trading either. They're looking for a little bit of an edge. Do you give any kind of beginner classes? What you're talking about is pretty
yeah,
heavy stuff for even an advanced trader.
yeah, yeah. So I teach from beginner to like advanced expert. The only reason I got into prop trading was because I'm going to be in the World Trading and Investing Championship. One of my mentors won it for 2 times, and I wanna enter the $5 million one for the fund manager because I'm getting my RIA to manage 500 million AUM for a hedge fund.
Nice.
So I got into prop because I wanted to win the World Trading Investing Championship and then write a book. And part of building the algo was I've won a bunch of records and I've done really well in regular markets to my regular accounts. I wanted to make sure it worked in prop, and so I learned the hard way. Oh, there's a lot of redesigns. There's a lot of different things you have to do.
Right,
So
right.
really,
Those guardrails are a little different than running your
they're
own cash.
yeah, it's a little different. Like for me, I don't need the liquidity. Like a lot of people probably go to a surge or a prop because they need to be funded. They need the liquidity. Personally, I have a lot of money and I've been trading for a long time successfully. My trading account's up over 200% this year. I did 300% in the bear market. But in prop, it's a whole different monster. It's a lot different because of the drawdown rules and how it trails. And I just learned that the hard way. I just opened a $1 million prop with you guys and got at 42 grand. And I was walking those stops up on the hourly off the pivot lows with a little bit of wiggle room off like an ATR. You follow me?
Sure, yeah.
Okay. So, and I was doing that and I had a lot of winners. They were up, 1,500, 4 or 5 grand, Meta, CrowdStrike, I hit those bottoms, Tesla, Nvidia,
Hmm.
ran all those, and they all got stopped yesterday, but I had a bunch of other ones still open. And because it went off the equity, it actually knocked me out. So, I got my little notes and I'm trying, what I'm doing is I'm recalibrating a new system basically just for prop. And essentially what that comes down to is less trading. Okay, don't
Uh-huh.
over trade. You can
Sure.
hedge, but if you're gonna hedge, you kind of you definitely want to use the supports and resistances or open them right next to each other, equally or neutral is what we would call it. And then you definitely what I made the mistake on, the reason I breached was because I didn't calculate when I took the 42 grand profit. I didn't calculate the trail that dragged me up so high.
Right,
against,
right. The high watermark,
and it
the
was
high
so
watermark is trailing.
correct. And so it was such a hectic day yesterday when the leader of Hamas came out on TV, not in America, but on like Al Jazeera, and said, that they wanted to go to war with the U.S. and they have cells in the U.S. and they didn't put that on U.S. TV, but that dropped the market. That's why that intraday oscillation came in so savage, and that's when I got stopped on the longs. And I was trying to put hedges on so fast. I was in there in the meta, and I was trying to put all the hedges on as quick as I could before the bell closed. And then, I looked at the portal, I looked at the breach, I was okay. I knew I could trade crypto or oil at night and make up some of the equity, but then when the time clock ended, I guess I didn't calculate because I took so much profit that the trail would go up. So what it said on the
Hmm.
screen was different than what was going to expire in like an hour or two. So I learned that. So
Right,
now
sure.
I'm going to open up another $1 million 10x leverage account today. And then what I'm going to do differently is I'm gonna still do one of the strategies I'll show you, which is called the Jedi Greenlight strategy on the hourly, short or
Hmm.
long. And then I'll show you a way that you can hedge or protect your equity curve using shorter time frames on the oscillations on those time frames. But what I'm going to do is trade less and just strictly be in and out on the hourly. Okay, I'm not going to scalp. I'm not going to like position trade. I'm not going to invest. I'm going to trade less and just go for bigger trades. So maybe bigger position size, but less open trades to manage. And
Sure.
I think that's the way to knock it out of the park with
I
Surge.
I think so. I think you're right. When you have so many positions on, particularly when you double it up with hedges, now you've got twice as much, or
Correct.
a magnitude as much. It's hard to manage,
It
in
would
any
be
capacity. So
it would
you're
be better not to be throwing on too many hedges, and it definitely would be better for anybody listening, if you're gonna hedge or you're gonna enter or exit. Sorry, I know my camera's up here and I'm looking at Corey down here, so I
no, no,
apologize.
please, no problem.
If you're gonna enter or you're gonna exit, you definitely want to have, like, I'm a very rules-based guideline type trader. I'm very disciplined in that way. So I enter, I wait and wait and wait for the right entry and signals, and I exit with the right signals. But if you're gonna hedge, uh, you're hedging for your bias on a longer time frame, and you're hedging off of maybe a pullback on a shorter time frame where you're actually going to pick up money on that short, but only be in it because your bias long will continue to run at
Right.
some point. But Corey, you're correct for your listeners, because if you open up too many trades, especially in the middle of a secular trend, whatever time frame you're on, that's where you're going to have issues with an equity breach. So you want to make sure if you're hedging, you have it very systematic. And I'll show you what I mean by how I would enter on the hourly with a bias. Say the daily and the weekly are looking good, and I'm long. Like for instance, in my futures account, I bought a good example is I bought a Bitcoin, a 20x leverage at 25,163. I still have that
Hmm.
trade. It's up 130, 140%, whatever. But I have to stop at 300. But I went in my Discord and I said, guys, hedge and go short at 28 or 28.1. And so what I did is I got like, 7 Bitcoin long at 25,163. I have my stop really low instead of walking it up. I was walking it up, but then when I decided to hedge, I took it way back down. And then I took the profit on, I told everybody, just set your take profit at 26.6. It's going to be a big liquidity zone there. I think it went like 100 below it. I took my profit on it, and
Hmm.
now I'm just letting my long run again. So I took the five off to slow the bleeding on the short, and leaving the long open again.
What I'm hearing, and I've hedged before, and it's challenging. You can't have too many on because it's hard to track them all. It just becomes, what was in profit, what's not in profit, and where's it going. So it kind of it could get crazy.
Yeah, and especially with prop, it's different because, okay, when in your regular accounts, hedging is good. That's why you want to have ammo and capital for, you don't want all in guys. You want to have ammo and capital so that you can protect your equity curve in your regular accounts. Like I manage your corporate treasury, personal accounts, family accounts, trading accounts, hodl accounts. But with prop, Corey said it best. You don't want to have too many open. You want to focus on less trades and the right trades and the right entries. And if realistically, if you're trading the hourly, you're really in at one of the best prices and out before the drop at the top. So you don't really need to hedge unless you're trying to position or invest off a daily. You can just close the trade, take the profit, let the high water mark go up, get on to your next trade, which will probably be the same
Right.
position short on the pink lights, is what I call it.
Mm-hmm.
So yeah,
Mm-hmm.
you're correct about that, and I've learned that lesson the hard way. In prop, because it's trailing off the high water mark, but it's a breach off of the equity, so you don't want to have a lot of positions
Right.
open. And I'm
Yeah,
learning
it
that, but I
starts
want to
whittling
make
away that margin.
exactly.
Chris, tell me this. I know you have a lot of variables that go into your trading that you're looking at to make decisions. Do you have just kind of a general basket rule of thumbs? A lot of guys say, hey, no, don't lose more than 1% of your account in any given trade. What are some of your best practices that are maybe two or three of them?
Well, there's a lot. Certainly, position sizing is important. It really depends. Okay, so it depends on you. Okay, what are your goals? If you're a hodler, then you want to buy low and sell high, and you want to avoid short-term tax capital gains. If you're a trader, then you're looking for momentum. I'm a momentum-based pivot-to-pivot trader, so I'm
Hmm.
looking for volume and momentum, and based on that volatility, I'm choosing my time frame. So obviously supports and resistances, key levels are important. Um, you know, Position sizing, sure, depending on how many positions you have. Like I'm not scared to open, a few big positions and manage just a few large positions. Like there's positions I'll put 3, 4, 500 grand in a position. Like the other day I had 3,300 shares of Tesla, and I just trimmed a bunch of those, in an account. So it just depends. But I'm always looking for breakouts. I know where I'm at. Am I in phase one, two, three, four? Which if you guys don't know, that's simply every stock and crypto in the world. It looks like a mountain. It goes up and down. You have phase one, which is the accumulation phase. Okay, and that's when you're
Hmm.
just
Right.
you're just coming off the bottom and you're going above the 200, say on the daily. That's where smart money is kind of buying. Then you have what's called the participation phase, where there's a secondary trend that pulls back. That's where retail comes in with institutional buyers, and then you have a distribution phase, and then you have the bear phase, the phase four. So you want to know where you're at there, but then you want to know where you're at in the cycles. And I don't want to get too complex, because cycle chaos theory phenomena, the way cycles intersect from 50-year GDP to CPI on a
Sure.
month,
Sure.
a lot of different stuff that goes on. But I know from trading for so long what's going to get hurt the most. Okay, so if inflation is rising, tech is gonna hurt. Why is that? Okay, tech is going to hurt because tech is high growth, and if you're growing, you need employees, and you need R&D, and you need all kinds of things. So you
Right. A
need
lot
to
of capital.
grow quickly, and you
Capital
need
intensive.
capital. It's capital intensive, correct? And so therefore, when you're in a high inflation or a high rate tightening cycle, it's harder to get that capital at a low cost to grow as quickly. So tech will suffer. Thing with banks, if banks are not, they're going to have a credit crunch and not going to be able to lend, and because who's going to want to buy or refi a home that is at a high rate. Well, banks are going to suffer. So you're looking at your sectors. Okay, you're looking at what's going on now. Inflation goes up with commodities. So if you see gold and wheat and pork bellies and oil going up, well, inflation's going to go up. Real estate will go up with inflation. That's kind of how that works. So I
Hmm.
watch my sectors, I watch my industry groups, I watch my supports, my resistances, my entries, my exits, and I watch leaders. I'm always looking for leaders. And when I say leaders, it's not just technical, and we're not in a fundamental market at this point. I thought we would be in a
Hmm.
more of a fundamental market by now, where you're looking at earnings per share, month over month, but
Right.
also
Right.
the
That's
same month a
it's
year
been wild.
ago, and annual revenue
Yeah.
growth and pre-tax margin. But we're just not there. We're still technically driven because of all the catalysts going on in the market. You know what I mean? So understanding technicals has been key for years. Lately, we will always get back to a fundamental market. And so, back to your question, if you're an investor and you're hodling, then you want to be looking at things that are, like a Warren Buffett way, which is, not necessarily my way, but you would want to be buying the out of favor sectors. Okay, the
Sure,
ugly
right,
girl at the dance. Okay, the wet dog trying
right,
to
exactly.
get in on a Sunday morning, when it's raining. You want to be buying that low PE junk that nobody's looking at, not the junk in there. You want good companies that have, a lower PE, and you want a
Right,
long
just
time
on
to that.
sale. You want the ones that are on sale at the
Sure,
moment.
buy low, sell high, right? But if you're, doing more of a William O'Neill base breakout or a Dan Zanger style or Mark Minervini, where, you're looking for, the position to, trend up and it's showing strength on the daily, and then maybe it has like a base, and that's okay that it has a base. It's actually consolidating and squeezing, and then, right when it breaks out from the high of the base with volume and it holds, you could just get your stop under there and make a bunch of money. Like Dan Zanger, one of my mentors, he took 11K to 42 million in 1 year. Audited, was the most profitable trader
Wow.
in the 90s. Yeah. And my other
Wow.
mentor is Mark Minervini, two-time world trading champion, and my third is William O'Neill. And what I did when I built the algo was I put everything that they know and did into the algo, and the fourth person would be me. I changed some things up with some coding and some AI and stuff. And the reason I did that was because what they had was so good, but a lot of it, speaking of William O'Neill specifically, it was made 60 years ago. So
Sure.
they have everything correct with the tape reading and how things work in waves and things of that nature. However,
You have to move it into this century.
we updated it.
Right, right,
Going all the way
exactly.
back from Livermore, to those
Sure.
things apply, but there's just new technology and we can adapt with coding and some stuff like that now.
Tell me about the world championship. When is it? How are you doing? Or is it current on? Are you next round?
Yeah, I'm gonna probably do it the next round, and there's different categories that you can enter. So I want to do the fund manager one, which is $5 million. Now it's not like the World Series of Poker where you put in money, and if you don't win, you lose the 5 million. You just let the S&P monitor your account and the people that run the contest, and you there, and they have access like through an API to monitor your trades, and yeah.
Nice, awesome. Are
Yeah.
you going to be posting the results? Is it something you're going to publish?
Oh yeah. When I'm
Cool.
into that, we'll definitely be doing it. Right now, I'm monitoring 9,000 different institutions, banks, and funds below and above 100 million. And yeah, that I just breached in prop, but I will tell you, I am number one out of those 9,000. And I also had the highest profit record that was beaten. I beat it by 1,383%. I also beat Ray Dalio's record, his career high of 55 years in the first 4 months of this year. And still this year, even after the drawdown on August and September, I'm still up over 200% in my account from January 1st for this year. And
That's awesome.
Here's something really cool for you guys. And I haven't been doing YouTube, but I never found anybody on TV or on YouTube ever. And I asked everybody in my Discord, to look and search. I never found anybody that did what I did. I and it's all documented. It's all in video. I made over 2,000 correct predictions. That was different than what every CIO and everybody would say on Bloomberg. 4 or 5 days before the crash, I told everybody, get out. It's gonna fall. Like it's you take all your get out of the market. I also did it in middle of February 2021. I called my brother. I said something's not right. Get out. And that was a 4-month crash too. Then I predicted exactly where the bottom would be, when it would be, how it would be, that it would double bottom, and exactly where. And I made videos every day for 2 weeks prior explaining that. And we bought the exact bottom candle, the exact bottom wick of that day. And that's all documented. Now in my HODL account, that's why my Nvidia is up 188% still. And all these HODL ones are
right,
way up, and yeah, so I mean, essentially, the real way to make money in the markets is to be non-emotional and to be disciplined and to
Hmm.
be structured and to be rules based. And
Right.
and it's emotions that are your worst enemy. You are your worst enemy when you're emotional, when you FOMO or you panic sell, or you have to think that there's somebody behind the scenes that is trying to create that, and they do that through the news narrative. Okay, that's how market makers work. So I've been reading this guy Richard Ney's Kingpin of Market Making for Wall Street, and every
Hmm.
time there's a book out there, somebody snipes it and takes it off the market. Like they don't want people to read it. Well, I got both of his books used. I paid like 150, 170 bucks used for these things. Ugliest books you ever saw, like this puke yellow cover. Like it's called like the real
But
game
the sauce
changer.
is in there, though, huh?
It's the gem of gems. And so yeah, I look at things more from like a market making perspective, and that helps me a lot to not get tricked and to kind of like understand their campaign and what they're trying to do. And a really good example for a lot of listeners would be on Bitcoin because of the circulating supply. And so
Hmm.
that's why it's controlled so well. Like, for instance, when it was at 60 and then it pumped way up to 64, they were already set shorts right then, but they wanted everybody to FOMO in on that excitement so that they could bring it all the way down, push it all the way down and up and down lower highs, then shake everybody out to where they're at when they're broke and getting two jobs and layoffs and inflation's high, and then reaccumulate slowly and sneaky,
Right.
and then retest the zone. So right now, one of the zones just got retested at the 28,000 area. So now there's going to be a little pullback, which there is, right? And then it's going to push up, and you know, so the variable is time. The variable is
Right.
always
Of
time.
course.
So depending on
Not to put you on the spot, do you have any predictions for it?
for what.
General market, but Bitcoin specifically.
Well, look, I believe that we already bottomed and it's always going to be bumpy to the top. Okay. If you go back and you look at the Dow or the NASDAQ back in 2007 and 8 and 9, so it started dropping 7. It really dropped in October 2008, but it bottomed in 2009. And yet the media back then was fear, fear, fear. Everything is horrible, and it was really bad. I lost $10 million back then. And, but it did bottom and smart money came in and it went all the way up and it didn't break even all time high until 2013. So 2007 through 2013 is 6 years, but 2007 to the bottom of 2009 was only 2. So it was bumpy
Hmm.
on the way, and then it went all the way to 2021. So it ended up being what, a 13-year bull cycle.
Yeah.
But
Right.
people are so fearful from 2009 to 2013, right? That they're not getting in there. But market makers are going to swoop in. They're going to buy all that, and the variable is time. They're going to wait. And they're going to wait until that participation phase comes in and people are ready to buy. They're going to empty out their inventory at a higher price. That's why it's prudent to sell tops, to understand tops and bottoms, and have a strategy so that you're cash heavy, and ready to accumulate in that phase with smart money.
Awesome. Well said. Do you have any resources that you could send people to who want to learn more about these phases? I know you mentioned there was a book you have, but that sounds hard to come by.
No, the
Just
book I
generally, where
haven't.
should people be looking?
Yeah, the book I haven't written. So if you go to my YouTube channel, which is Wheelhouse Trading, it's like black and gold. There's a section in there called tutorials, and it goes over so many different things, from beginner to expert. And I haven't really had a lot of time. I'm managing 7 accounts right now, and about to do an 8th one with you guys. But there's some really good information on phases.
Awesome. Awesome.
Why?
We're going to put the link in the description here, guys. So anybody who wants to check that out,
Yeah.
certainly take a look at it. Give Chris a follow over at Wheelhouse Trading. But Chris, I know you have some charts pulled up for us. You want to dive in and give us a little behind the scenes look?
Yeah, we can take a look.
Awesome. Thank you.
Let me switch up here. All right. So can you see a screen?
It's coming up now. Give it a
Okay.
second here. Perfect. It's loaded.
Okay, so what we have here, let's just go to the daily, so I can kind of break something down here for you. Sorry, I have a trackpad that goes across all my computers, so it keeps moving. Um,
Before you jump into that, let me ask you this. A lot of times people, they love to know what setups look like. I imagine yours is pretty robust with all the data you're following. How many screens are you looking at?
I have one, two, three, four, five, six.
Got it.
Yeah. So okay, so there's a few systems. I mentioned I have three different systems. So one is called I call it the core sync system, and essentially everything I do is momentum based. So all my indicators are going to be momentum based. That's why I have a hike and a she candle. Okay, as you can see here, you have a purple, but notice the wicks are pushing up. Those are what are called hammers, but they're not like crazy hammers where the wick goes all the way to the top. But you can see momentum coming in. This right here is something sneaky we have that nobody has. That blue diamond is actually a threshold for institutional buyers through the dark pools. So when you see
Hmm.
that, and then you see the Elliott count, and then you see this go over, and this coming off the bottom with a cross, and this one crossing at the same time, and your volume going up, and this crossing, and then this going blue coming up, and you get your first blue candle, and you're above the 200, plus that green dot right there. It's what's called a false breakdown. So it looks like it's coming down. Oh, no, 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 no. You see the green dot, it doesn't go down. It actually indicates it's going to go the opposite way. Just like this one, you think it's going to go false break up, but then it shows the blue and it comes down. So strategy one is a core sync system. So you're looking for 1, 2, 3, 4, 5. You actually get 6 if it's low right there. This blue one coming up, and then you're looking for that green dot right there, which is the LSMA. It's for faster trading. It's called a Langwire simple moving average. This is a bonus. Being above a 200 is worth a lot of points. Basically, you can get to 96 points. Now, when all that happens, it's like the perfect entry, okay? And so you buy right there, and you essentially uh, you can make a few decisions on what you do. But the same thing happens right here. Okay, so it unsinks. You're high in the range. There's your dot. You went below. You crossed. That went purple. This crossed and went down. And it's going down. So you know to get out there as a simple way. Another way, okay, system number two, and this is badass. It's called the Jedi green lights. Okay, now this is something we designed, and it's actually pulling up information off all the exchanges, money flow. It's got all this data in there. So, for instance,
And Chris, are these for sale? Can people
no,
access these charts, or is this totally proprietary?
this is proprietary.
Got it.
Yeah, I've been offered many times. So so right here, you're coming kind of off this bottom right over here. Am I on the daily? I am. Okay. So you're kind of coming off this bottom. And this is what I tell people, and this is what I've been doing with the prop. And I want to kind of stick to this because I want to show you how I think prop will work best if you just follow this strategy and you understand what I'm going to show you here. So
Yeah,
every
please.
single time when this thing goes green, you do not enter. That's not what you do. You actually have to wait for your HMA, this blue one that rounds. It's called a whole moving average. Now we have special coding in ours. And what you do is you wait for this to go green, and then you wait for the very next time for this to go blue, and it's always best when it's in the middle and starting to curve up. And that's right where my long and green triangle go. So you would buy right here, let's just say, on this candle. Okay, at 16, let me go to a different computer. You would buy there at where did I say? 16,619 as an example. 16,619. Okay. So now that you've been signaled that the green light is coming, and you wait for the next blue HMA in the middle of it, and our thing will show you, and you buy in right there. Now you can just trust the green lights. Even though this is savage and this is savage, you can trust the secular trend, uh, and then you can exit when this is pink and this is pink. They both have to be pink, just like these. This has to be green and this has to be blue. But what I was saying about the hedging is, if your bias is long on the daily through the secular trend and you're trading the daily, well, then you're gonna want to, short these oscillations, and you're gonna want to do it in the middle of the pink HMA, and then close your short here. That way you're cleaning up your equity curve. So your bias is long. Let's say you have 10 Bitcoin long, okay, from here,
Mm-hmm.
and then you want to, you could go neutral and you could go 10 Bitcoin short, or you can, do 8 or 7 or whatever, just to slow the bleeding, and you take your profits here on your short and let your long run, and then do it again. See, I got an S right there. We actually put the S and the L's in there so you know when to do it.
Nice.
And so what I do, just to back it down, is I actually do this on, say, the hourly. So as an example, a good time is right now. It's actually perfect time is right now, because it basically found its bottom. So anytime this blue line and this one, they line up with this, and you get all three, it's showing you a double bottom, okay? And now you got your green light. So you're waiting for this to come in. Now this red zone right here is people selling. This is people selling, okay? And this blue one right here, this is the market maker thing. This is what's called the discount zone. And you'll notice on our charting that every time the wick goes, it goes right to the bottom of the discount zone. And if it breaks out, then they flip, okay? And when people start to buy, this will turn blue. And this dotted one, which is attached to all the exchanges, will actually pull off the sentiment from all the exchanges on this particular instrument, which is Bitcoin. So because you're getting hourly green lights, and you've already seen the double bottom. The reason I say the hourly is because you've already gone through the 1 minute, 5 minute, 15, 30, 45 to get enough strength and momentum to get the green lights on the hourly. But remember, you don't want to buy quite yet, because if you would have bought that candle, you're already down. So you want to see the blue, how it went blue?
Yep.
People are coming in, they're starting to buy. And if you go back and you start looking, you can start kind of thumbing through these things and see why. Which it's showing a point of control is right in this zone. So people are buying. So back to the hourly, what I do is, and what I would do for prop, and what I'm gonna do in Surge, because I hit all those trades when I made the 42K perfectly, and I did it off of the hourly, off of this system. And so what I did was, I waited, and then it always comes down, and then there's a blue HMA, and then I buy there, which will probably be right at the top of this zone. It'll make a higher high on the smaller time frame. That's probably what'll happen, right?
Mm-hmm.
26,610. And then I'll write it up. So when I write it up, what I'm gonna do is, let's say I entered here, then I'm just gonna use these pivots as my stop points. So for instance, if I have the stop right there, let's say I'm not hedging, it goes up, and when it comes down, I got stopped. Okay, then I'm gonna wait, and I'm gonna rebuy in here and let it go, and I'm gonna move my stop there. And when I see this go pink, I'm getting out. I'm getting out of that trade. And I just keep doing the same thing over and over and over and over. So like for instance, if you're short, which I told everybody to go short around 28, so you would have got your pink lights. You made a lower high. You got your pink lights.
Mm-hmm.
Wait for your first pink. There's your S. You buy right there at 28, like I told everybody. And then it comes down. You made a lower high. Now your stop is here. Came down. You made a lower high. Now your stop is here. Your buy stop. You made a lower high. Okay, now you're making money because you've already come from 28 all the way to 27,
right.
66. If you do it with size, you're making money. I trade with size a lot, so this is good. Okay, so now your stop is here. So it comes all the way down, and then your stop is here. And it comes down, and I actually had an alert on here. You can, on TradingView, you can just go over here, and you can, I might have done the wrong thing here. Anyways, you can just add an alert. I think it's picking up because I have stuff behind the scenes. But I had an alert, and if it broke this area, then I would probably have the green lights. And technical trading is you want to break that previous high and then you're off to the races. Now, getting above the 200 is going to give you more strength, but as you can see, if you
Sure.
were long on the daily from 25 like I was, okay, if you were long on the daily and your bias was long, and then you were shorting from 28 down, boom, 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 you just basically got stopped in the profit and you're getting ready to let your long run because your bias is on the daily. But for me, that's fine for your hodling. But for me on trading and what I'm going to do for prop is I'm simply going to do what I just did. And I made that 42 grand like super fast. I came in here. Adobe was one of them. So I basically bought in the same way I'm showing you. I waited for the green lights. I got that count. I waited for the green lights. I saw that we hit the discount zone and institutional buyers came in. I came in right with it, and then I basically just ran it. There's a higher low, so I put my stop there, a little below, and you can see it'll actually do the numbers. But what's cool in our thing here is we actually have it set where you can, if you wanted, you could actually put on stop loss labels and it'll calculate the ATR for you.
Oh, nice.
Yeah, it'll calculate the ATR based on, for you guys who aren't familiar with what average true range is. So an ATR will measure the volatility. Let's say you're on the daily over the last 14 days. It'll give you an average range of that volatility. And what you want to do is you want to take that and add it to the pivot high. So it'll, we have it where auto does that. And it's the same thing for the, if you were on the 4 hour, it'll have 14 4-hour periods, or the hourly would be 14 1-hour periods as an example. So back to, Adobe, this trade I had that I got stopped in the profit on because I had my stop.
Hmm.
I actually had it right here. It was like 449. Yeah, 449 right there. And so I bought in perfect off the discount zone. And then it came in, I had my stop there. It came in, I moved my stop here. It came in, I moved my stop here. Okay. It came in, and I think I moved my stop just below this pivot. And then I had it here. And so what happened is when it got really high, I actually put on a short right there. And so when this one got stopped, so did my Microsoft, my CrowdStrike, my AMD. I had all these ones that were up, 1,500 to 5 grand, and all those hedges kicked my ass because even though they were going to make money, and they are because it's going to come down, they were, they in surge or in prop, your gains kind of lift up your
Right. Yeah. That
equity,
high
right?
watermark kind of follows you up.
Yeah, so that was a little lesson learned. So I traded it perfect, and doing the hedge was perfect. But what you probably want to do is just focus on like the Adobe doing this, and then take your darn profits and do the same thing. Like I wrote AMD perfectly. It was just a monster. It came in like this. I got the green lights, okay, and then the HMA went right there, so I bought right here because I had the green and that, and then I just boom, I was already safe. I already had my stop right there. Okay, then it comes in, and I get my stop a little higher. I move my stop a little higher. It comes in. I had my stop here. I get knocked out. I come in. I rebuy. It's green. I got a false breakdown. Institutional buyer. HMA goes blue. Elliott's. Everything shows. So I buy again, and I do the same thing. A higher low. Stop. Higher low. Stop. Higher low. Stop. Higher low. Stop. Higher low. And then this is. And I actually moved it to here, and I put the hedge on. I did the same thing, which is I learned is now a mistake. What I should have done is just basically had less trades, ran the system, let them get stopped. My high water mark would have been 42.
Right.
I would have
Right.
been in the
Keep
gain threshold and not
keep
had
it a
all
little
these
tighter, manage them a little closer.
not had all these open red positions that were going to be green. And so that's where I got a little messed up on that. But now I understand that. So right now you have the pink lights, and this just went pink. So this is pink and pink. So now you know that AMD is going to come down. Well, where is it going to come down to? This is the liquidity zone. Okay, this is the buy zone because it's blue. That's the equilibrium with physics. So here you got the premium zone, the discount zone, the equilibrium, and liquidity. So it could bounce off the 200, but we have this thing in here called a CCI. It's a confluence. It basically, okay, you see this color purple? That's a regular purple color candle. But see how this is a
Mm-hmm.
lighter purple? That's showing the
Yep.
velocity, the force is coming down harder. And because you're at the beginning of the pink lights, you're probably going to break down, and it'll be bumpy in areas. It'll probably bump here and make a lower high, and it'll come down the point of control and make a lower high, and this lower high, and it might come all the way down here, or even further. But I think that 98, and I would take your profit like 101 or 100 and just call it a day,
Mm-hmm.
and not do the hedge thing, and just run certain assets that you like down on the hourly. Now, if you don't want to be involved on the overnight thing, which I can understand for prop, I've learned that too, then you just back it down and you do the same thing on the 5 minute. Okay, you just come in here and you're like, I know I don't want to leave this open. Shit could pop off in Norwegia, or who
Sure.
knows what's going to happen tomorrow, right? I mean, it could be political, it could be geopolitical, macro, it could be war.
Yeah, like we've seen.
So maybe you want to close your trades and just sleep well at night and not stress. And so you wait for your 5 minute, and you actually are okay to buy this because it goes green and it goes blue in the middle right away. So you can buy right there, and then it goes up, and when it comes down, you're already in the profit. You're already safe on your stop, and you just let it run, and you get another stop right here. And then when these big candles come down, I move my stop here, and of course I did the same thing. I hedged, but which was a mistake, and I'm telling you that now. What you want to do is just let yourself get stopped, or just close it out manually, and then wait for your
Right.
signals, and then take that trade, on the same instrument down, which you can see on the 5 minute. It went pink and pink here at 110.61, and you're already at 105.89. So let's say you bought 1,000 shares of that. Well, the difference between 106 and 110 is $4. If you were really good, let's just call it $4 and say you didn't hit the top.
Mm-hmm.
That's $4,000. Okay. And you're still going
Sure.
like 101. So you still could get another, $4,000 or more. So it could be $8,000 trade playing one instrument down on the 5 minute. And that's one way you could do it without the hedging, without all the different positions open, and worrying about the equity breach if you're going to take profits. That way you're not so focused on selling losses to make
Right.
up for it. You're actually just being a little more singular in your trading and walking those stops up manually to protect your drawdown. And so there's a lot of really, really good ones. And this is a combination of everything in this watch list is a combination of what I've been trading in Think Markets, which is your new partnership and is outstanding, by
Yep.
the way.
Thank you. We've been very happy with it as well.
Yeah, and what I like about Think Markets so much, Corey, is well, bottom line, it's the selection of tickers. I mean, okay, yeah,
Right.
you got crypto, maybe
A lot of products.
you had before, but you have all the ones you need, so it doesn't matter.
Sure.
Because really,
Right.
you should just be trading Ethereum and I mean, you could throw in some Aave or whatever, but mainly it's kind of a Bitcoin and an Ethereum. So crypto's covered, but you got oil. Okay, like I did a trade the other day where I bought 100 lots, which was 10,000 barrels, and dude, that thing was like it was up, and I took profit. And then I did a hedge, and it went down, and I took profit and let it come back up. And that's something I probably shouldn't do, and you guys don't want to be doing. That's a really advanced and very dangerous, running 10,000 barrels long and short, like the three penny spread, because every penny is $100. So you can go up and down 10 grand really fast, and it's highly dangerous with the way the equity breach is to be doing that. So what I would do is less lots and less instruments, and focus on that trade and wait for the catalyst. Like, hey, they're going to close down that shipping lane coming out of that region where 3,000 barrels of oil go per day, and boom, you're going to see oil skyrocket. So if you wanted,
Right.
you know, you could go over here to Brent. That's the one I was doing. And while I'm telling you the story, I just want to go back to Think Markets and your partnership. So what's so amazing about what SurgeTrader did recently, not just partnering with Think Markets, but also the full upgrades to their portal. Their dashboard is really good. If you haven't used it before, I've traded several prop firms because, again, I'm trying to write a book and wanted to build out my algo and figure out a lot of different stuff. So I actually passed and made a bunch of money with another prop firm. I've been speaking to the owner of another one. And he wants me to trade for him. But I kind of fell in love with Surge. And then I really liked Surge when they got Think Markets and changed this dashboard. And of course, Corey, the gentleman that I'm talking to, he's my rep, and he's been like super cool. Like him and I, we text back and forth, and he always answers my questions, and he always helps me. And so I just
Oh, Chris, you're a gentleman. You're too kind.
well, I just genuinely want to say thanks for that. But back to Think Markets is, guys, you get 3,300 plus instruments. So you have all your indexes, okay, long and short. You have commodities, okay, so oil, soy, whatever the hell you want to trade. You got metals, gold, silver, so you got all of that. Then you got Forex for your Forex traders, but then you have not just all 11 sectors, but you have all 192 industry groups inside of Think Markets, okay? And you can long and short as long as you understand your discipline, your rules, your guidelines, your strategy, and your system. And I recently learned, I put a few that I like from most industry groups that are moving, and some of this stuff they don't have. It's in my other accounts, but I'm essentially like I just killed it on Netflix with you, and that $42,000 thing where I breached. I actually hit Netflix like a G. It was I'm the hourly on Netflix. I am. Okay. Yeah. So yeah. God, has it been that many hours? Has it been that many hours? Was it this one? Anyways, I hit it and I did really well. And then this is where I got messed up. Is I held my position long and I went short. And so then when I got stopped on the long and let the short run, it was another one of those equity situations. But look how much
Right.
money you could make, okay, if you were running this strategy. So you see it go pink. Am I on the hourly? I am. Okay. Oh, this thing really tanked, didn't it? Jesus. Must have got an upgrade or something. So I'm not seeing my HMA. I'm waiting for it to populate. So essentially, let's just here. Let me change time frames. Maybe it's not populating. This is a really big short. So one thing that you guys should know, like if you're not used, let's say you don't have a lot of money and you're going to prop for liquidity, one of the things that market makers and institutions do is they tend to buy the more expensive stocks that maybe you don't buy, like maybe you buy options or calls or puts on Microsoft, but these guys, they like to buy, the Chipotle's and the Goldman Sachs and the Netflix and a lot of these institutional block trades will be on these bigger, be larger orders. And like, so there's a lot of action to be made on stuff that moves $10, $20 in a day, like an Adobe or Goldman Sachs or Netflix or something of that nature. So when you see this thing go pink like that, and you see that short, and you go out at 445 and you're at 377, I mean that's 23 plus 45 is $68. Okay, so let's say you bought 300 shares. Okay, that's 21,000 minus whatever. $500. Okay, just call it $19,000, and you're still in the trade.
Right.
You're still in.
Because let me ask you this: for people who don't have access to these charts, joining your Discord, are you giving signals? Like, where could people find this data?
Let me show you a third strategy for people.
Yeah, please.
It's super easy. Okay. Now this strategy kicks ass. I call it the 5 to 9 cross. Okay. It is so freaking good. Okay, if it's so simple, you get a line chart going, And what you want to do is, this is an RSI, this is a vortex, this is stochastic, and you want these to
Chris, I
cross.
think your chart
Oh,
froze up. It looks like we're
oh,
still on Netflix.
oh, give me 1 second. That's what I did. I didn't switch for you. Let me find that. How do you do it?
You might have to unshare and then reshare.
Okay, that's probably, so let's do that. Screen, window. Oh, okay, hold on. Okay. There we go. That's what I was looking to do. Okay, so now it's pulling it up. Okay, so let me switch to that. Let me pull this over. So this, guys, is literally, I figured this out, and it has made me so much money over the years. It is insane how good this strategy is, okay? It's very simple. You put a line chart on your screen. Okay, we're on the daily right now, I believe. You see the daily.
Mm-hmm.
And you put a 5 EMA. Okay, that's a screen one. And you put a 9 EMA on there. Now, when they cross, let's just go find you. Actually, you know what? Let's go find you Bitcoin. Bitcoin, a lot of people like to trade. Now, this thing is amazing. And I have a video on my YouTube where it shows you how you went from 5 Bitcoin to, like, I think 73 Bitcoin, and you went from 50 grand all the way to $1.73 million doing this strategy. And then it shows the whole spreadsheet.
In what time frame?
Off the daily. It's called compound trading.
In what time period?
Oh, so
how long was those returns?
It was like under 2 years. You'll have to pull up the video. It's been a while since I made it, but it's all under 2 years. So let me show you.
But it's simple, easy to follow.
Oh yeah, so it started here. So this is the chart I used from the video. So I can just get it to show me what I want. Oh, we're in 3,000 range. Hold on. Let me figure it out. Oh, there's the stops. Okay. So remember I was talking about phase 1. Okay, phase 1, this is a bear market. It looks a lot bigger, now, on a chart, guys. Okay, a bear market will look bigger on a chart than it did in the past, but this is the same thing back then. Okay, and this is like I was talking about in 2009 for the Dow. Okay, smart money came in on the bottom and it was bumpy, just like they did in October and January. But when you get above the 200, that's phase 1. So what I'm looking to show you right now is essentially you be above the 200 for safety and you get your first cross. Okay, the 5 its shoelace strings through. The price action comes up through the 5 and 9, and the 5, the green one's on top. Now think about it like this: if you understand moving averages, the 200's way down here. Above that would be 100. Above that would be a 50. Then there'd be a 30. Then there'd be a 20, and then there'd be a 9. And then there'd be a 5. So if price action's above a 5 and 9, you are screaming bullish. Are you with me?
Yep.
Okay. So your listeners are going to love this. So you buy that cross when it shoelaces through, and you buy right, and you go to the video and you can see all the money it's made. So you bought in at 9,201. Okay. Now right here, it crossed. Okay. So you're exiting at 11,767. So that's $2,500 per Bitcoin. Okay. Now you don't have to do the shorts. Okay. There's a cross. There's a cross. Okay. There's a cross. Look at this one. It's a monster. Bought here and it crossed here. So you just buy these crosses, but the trick is with this is you got to make sure there's a little black space in between. You never want your EMAs to go sideways, number one, because that's not, you need direction. And you want to make sure there's a little black space, because once there's a black space, the more you do this, not only will you compound, but the more trades you do over time, 1 year, 5 years, 20 years, 50 years, a lifetime, whatever, you're going to accumulate so much money over time. So as an example, it crossed here at 10,757. I remember this trade. And look, it went to the 5, but it didn't go to the 9, and it kept running. And it almost has to the right there. It did test the 5. Here it went through the 5, tested the 9. You're still in the trade. Pivot down, bounce off the 5, almost bounce off the 5, and right here it gets dirty. Okay, boom, and it basically, you're crossing. That's why I did the safety stops too. But you basically got locked out. And I showed the guys on YouTube. I said, look, if you didn't have the stop, you probably got caught and sold at the bottom, because this was probably pretty fast. So if you went from this 10,758 and you went to 17,000, I mean, that's, you can do the math,
Yeah, right. Of course.
$200, So it's really good. And then multiply by X amount of Bitcoin. So then you wait, and it crosses again, and you buy in right here into strength at 17,894, and it does it the same thing. And even though this price action came way down, notice how it didn't cross. And by the way, guys, this in between here is the cloud that's on my trading view chart. That's what those blue and purple clouds are. They're actually the crossing. So you bought in here again into strength at the 17,900, and you sold here at 36,000. I mean, that's a double. It's over a double. It's over 100%. And
Chris, is this one you track every day? Are you still using this as a valid strategy?
Dude, you have no idea. Like, I crush the game using the 5 to 9, and I also do it on the hour.
Awesome.
So, yeah, man, I definitely. Okay, so for instance, I'm running a treasury for a corporation right now. Okay, it's a crypto chain AI corporation, and I'm running their treasury. They put me in there, and in the first 2 months, I doubled it, and I did it by buying into momentum, and buying these crosses on the 5 to 9. But I also look at the indexes, because you got to understand, everything is about those indexes. Okay, so Dow, the top 30, and the Dow is actually a leading indicator. It's a barometer for the economy. Okay, like Charles Dow. So if he's going to slow, then the Dow is going to drop. Okay, the S&P is. I'm sorry if if the economy is shaky or uncertain or happy, the Dow is going to lead, and it's going to indicate that. So here's another great trade. Boom, it crosses right here, and you don't even have to get out until right here at 23,000, and you bought at 16,651. So this crossing is amazing. So essentially what happened on my story is they put me in this treasury, and I doubled it. Okay, I doubled it over 100% in like 2 months and 1 week.
Wow.
This is for like their payrolls and all this stuff, and they're in the AI blockchain crypto company, they're at warp speed, like money shit through a goose, and I'm sitting here running these indexes and I got up really high, and then what happened is beginning of August, I got stopped on a bunch of stuff, and like $500,000 got pulled to the side on stops. But the guy auditing me right now was the VP of Goldman Sachs, and or one of the VPs of Goldman Sachs, and he's doing my audits, and he told me I couldn't take a loss because he needs that to raise capital for the hedge fund. And so when I took that $500,000 aside, I had to leave trades open, and then average is not a method I normally like to do. I don't like to DCA and like to buy like a tactician and precisely, So yeah, I'm just gonna move back over here. But the 5 to 9 crossing on whatever time frame you want is really good. I do prefer using the 5 to 9 cross. So you buy the 5 to 9 cross here at 26,485, and what I do is every day I just move the stop to the 9, where like this blue one. So every day I move the stops. So it's 5-9 cross buy, stop 9. So you went to
that is simple. That's as basic as it gets.
It's so simple.
But it looks like it's a good strategy.
It's so effective. It's so effective. And if you actually do like Excel spreadsheets, and you actually compound and take the gains from each win and add it, and you wait, and then you add it to that cross, your 100 shares of Tesla will be 2,000 shares of Tesla in no time. You know what I mean? Like you just
That's
gotta
awesome.
stay on the same instrument and
Yeah.
be disciplined and rules based, guideline based, and do it that way. And so the
Awesome.
5 to 9 is really good, but in prop, what I'm gonna do is I'm just gonna measure the volatility of the marketplace environment, and then choose my time frame based on that. And most likely, I'm just gonna pick a couple hitters and go bigger sizing with like, three, maybe 4 or 5 trades, but bigger sizing, and just all in one direction with the indexes at the right moment. Hit it hard and tight on the hourly, exit on the pink lights, take my money, let the high water mark run, screw the equity breach on the trail, and just run. You know what I mean? Don't
Cool.
overtrade. That's
Yeah.
what I learned. Don't get all crazy with all your hedging
Yes.
and
Right.
overtrade, because that'll mess you up in prop. Maybe not so much in your other accounts, like your cash accounts or margin accounts, but in prop, I've learned that is pretty critical. So
Awesome.
yeah,
Well, Chris, thank you so much, man. I really appreciate you coming to share your insights with us. We're going to put all the links in the description here. Wheelhouse Trading. Chris also has an offer code for Surge as well. We're going to put in there, guys. So take a look at that. Check him out. And Chris, thank you again, and all the best luck with the championship and with your Surge accounts.
yeah, cool. And guys, honestly, Surge is. And I've done, I've done a little looking, a little research into this over the last couple of years, and I've tried several of them. And from what I found, I can't find one that I like more than Surge. Number one, the customer service is great. I think the pricing is totally fair. They give you options for stock leverage. I think some of that leverage might be specific to like oils and metals and stuff. But one of the things that's just so great is that dashboard, and their rules are very simple. You don't have like a two-phase audition. It's pretty straightforward. I like that. And this partnership markets is off the hook. It has so many
Awesome.
winners. You can't go wrong. It doesn't matter what sector is moving. It doesn't matter what's happening. There's something there for you to trade. And I like that a lot. That sends it over the line hands down for me. So you got good
Awesome.
customer
Those are the kind
service.
of testimonials we're looking for.
Yeah, man. Good customer service, good portal and dashboard, and then anything you want to trade, including crypto, long and short. Just don't over trade. Just focus on the right trade, the right entry, the right exit, and then take your profit, because that high watermark and that trail. Now, explain to me how the trail stops. Doesn't the trail stop at some point?
It does.
So if I went
So
above
once you're now
100K,
on,
if I was above 100K,
yeah, once you're up to 8% actually,
oh, so 80K.
it resets to your initial funding balance. So, for example, if you had $1 million, you bring it up 8%.
Oh,
Yep. So now it goes to $1 million. It stays there.
oh,
So you could run it all the way up to 2 million, all the way back down to 1 million. You just can't do it at more than 5% per day. So
okay.
that 5%, the daily's still there,
Okay.
but you've got a lot of room on the downside. Just that 5% is the one you need to keep in mind.
Okay, let me ask you another question for myself and your listeners. Let's say
Yeah,
you
certainly.
do run up, you're on $1 million account and you're up, 200K. Okay, you're past audition. This is cash. You're not worried about your trailing drawdown. And you don't want to take your money out quite yet. Is there a moment where Surge can take their portion out, and that could affect your? I guess in that case, it wouldn't affect the drawdown.
So we would only take our portion when you take a distribution. Now, one of the questions that a lot of people ask is, what if I breach the account? I'm up 200 grand. What if I breach the account? It's very unique to Surge. Nobody else does this. We pay out on breached accounts. So you're up 200. You hit that 5% daily loss limit. You still got one something, 190 something in the account. We pay you out the profit split on that, whatever that money is.
Are we recording?
So you purchase again.
Right? Oh.
Yeah, absolutely.
Oh, good.
This is claim to fame. This is claim to fame stuff.
I could see that happening. my guy.
Oh, it happens. It happens all the time. And other firms, they just close your account, and that's it. You're done.
My guy Goldman is gonna like that when I call him tonight. My partner, he's gonna like to hear that. We've been wanting to open like 10 million or million dollar accounts. I call them $10 million accounts because of the leverage. We've been wanting to open like 10 of them. And just go ham in there with you guys. But I know you can't do that. So, yeah, we were pretty excited. But now the one thing that he was always concerned about was what you just cleared up, that you can actually get paid if you are past audition and you are way up and you haven't done a distribution, but you breached the daily drawdown. You're saying, right? not the maximum.
Right. Or right, exactly. You breached the daily drawdown, so you had a bad day. You hit that 5%. Just like in your case, say you were past 8%, whatever positive equity you had in there would have been split.
Yeah.
So it's a win-win.
Guys, that just cements the deal for Surge, in my opinion. Because if that's the case, and they're doing that, and you can pass the audition, which you can if you don't overtrade and you're more singular in your approach with your entries and exits and not trying to get too crazy with hedging. That is the key. What Corey just said.
Right. Because now you could compound. Because a lot of people are worried about being able to compound.
Yeah, that's okay. Yeah, that is huge. I didn't know you guys did that.
Absolutely.
That's insane. Like that's exactly how it should be. So I learned my lesson. I was trying to go fast because I'm a fast. I trade fast. That's why I opened that account. I was up, 42 grand and quick. But I'm realizing, okay, you got a little slower, a little bit less, maybe bigger size. So
that seems to be the ticket, right? Exactly. Slow and steady. Because those guardrails are tighter than what you're used to. Slow and steady really, is the key here.
Yeah, for sure. Well, Corey, super cool to meet you, and thank you so much for having me.
You too, brother. Thank you so much, Chris. Our pleasure. I want to have you back on maybe down the road and check in on you.
All right, cool, man. Thanks, Corey.